name is Vishnu Kishan. I'm here to present about statement of financial position. Before getting to it, what is financial position? The statement of financial position, often called the balance sheet, is a financial statement that reports the asset, the liabilities, and equity of a company on a given date. The statement of financial position is formed like the accounting equation. Asset equals to liabilities plus owner's equity. Thus, the assets are always listed first. Assets are resources that the company can use to create goods or provide services and generate revenue. There are many ways to format the asset section, but the most common size balance sheet divides the asset into two subcategories: current asset and non-current asset. The current asset include cash, account receivable, and inventory. These resources are typically consumed in the current period or within the next 12 months. Non-current asset section includes resources with useful lives of more than 12 months. In other words, these assets last longer than 1 year and can be used to benefit the company beyond the current period. The most common non-current assets include property and equipment. Liabilities are debt obligation that the company owes other companies, individual or institution. These range from commercial loans, personal loans, or mortgage. The section is typically split into two main subcategories to show the difference between obligations that are due in next 12 months, current liability, and obligations that mature in future years, long-term liabilities. Moreover, equity consists of the ownership of the company. In other words, this measures their stake in the company and how much the shareholder or partner actually own. This section is displayed slightly different depending on the type of entity. For example, a company like the common stock, preferred stock, additional paid in capital, and treasury stock, and retained earnings. Meanwhile, a partnership will simply list the members' capital account balance, including the current earnings, product contribution, and distribution. Okay, let's see the example or statement of financial position. When we do statement of financial position, we need to do some adjustment. For example, cumulative depreciation. We need to do some calculation to find the cumulative depreciation value. For example, delivery man, the original value of delivery man is 70,000 and the cumulative depreciation value is 28,000. We need to plus with 14,000, which is
came from the person, so we will get 42,000. We have to minus with 70,000, we will get the 28,000. It will be the answer, the value of depreciation.
That's all from me. Thank you for watching.
Hello, Assalamualaikum. My name is Muhammad Ashraf bin Paris. My matrix number 08DPR19F2015. I want to share you about product life cycle growth stage. In this stage, the sales grow at an increasing rate and profit reaches the peak. Now there are more competitors and large companies may start to acquire small pioneering firms. Garnier products fall in this stage. The aggressive branding, advertising is needed. The product become less informative and focus on attracting consumers' emotions. Garnier shares latest style and contents-rich ingredients that present its theme of classical that intended to attract customers and differentiable from its competitors.
A very good evening, Puan. Today I'm going to talk about the statement of financial position of question 5, practical 2. Statement of financial position is prepared, determined by the financial position of a business at the end of an accounting period. It is prepared by listing all of the balances, included the assets, capital, and all liabilities of the trial balance of the business on a specific date. In the statement of financial position, it is a conceive of non-current assets, current assets, non-current liabilities, current liabilities, and also owner equity. So let's take a look at non-current assets. Non-current assets are obtained from a business to may be used for several peaks of time. They are expected for the last at least more than a year, and they also help to generate income of the company. Example, more like non-current assets are land, buildings, machineries, and also office equipment. Next, current assets. Current assets will be used in one day of time. They have a short life period within the company, usually less than 1 year. The value will change frequently and to be converted into cash quickly. Examples of current assets are stocks, cash at bank, and also inventory. Next is non-current liabilities. Non-current liabilities, the money owned by the firm which will be not repayable until 1 year or more. Example, a long-term loan, small wages, and debtors. Current liabilities. Current liabilities are the money owned by the firm which will be paid in 1 year or during the next year. Example of current liabilities is bank overdraft. Lastly, owner equities. The owner of the firm provides the capital for the acquisition of assets for the business. It is a financial obligation of a business to the owner. Profit will be increased in the business of capital, therefore increase the owner equity. Loss and drawing will reduce the business capital, therefore also decrease the owner equity. Drawing occurs whenever the owner uses the asset of business for his personal usage. So these are the important factors in statements of financial position. Now we are going to move on the format of statement of financial positions. Total assets are equal to total owner equity plus liability. Asset is equal to owner equity plus liabilities. So the formats goes like total non-current assets, current assets equals to total assets and also equal by the owner equity, current liability and non-current liability. So we should calculate the non-current assets, current assets which is equal to owner equity and non-current liability and current liability. So let's go into the question.
Okay, we have Rhea Enterprise here. That we are required to make a statement of financial position as at 31 December 2019. So for the non-current asset, we have a freehold premises which is 360,000. Then for the office equipment which is 6,000. Accumulative depreciation of the office equipment which is originally 1500. Then you have to add up the value after the new percentage, which is 10%. So we have to times um, the the original value, which is 6000, with 10%. Then you will get this 600. So you add up these two, you will get 2100. And when we minus 6000 into 2100, we will get this 3900 for the value. Then we have motor vehicles here. It's originally 75,000. Then the accumulative depreciation for the motor vehicle, which is 25,500, and then we calculate the original value, which is the percentage, which is 20%. We will get 15,000. Then when we add up these two, we get 40,500. Then we minus 40,500 with 75,000. We will get this 34,500. And as the investment, we will get 9,000 here. So for the total non-current assets, we have 407400. And for the current assets, we will have closing inventory, which is 1,105,000, cash, which is 750, and bank, which is 102000. Debtor is 10,000 and 2,000. And for the back debt, we have 1,200 in additional information, and also the provision for doubtful debts 4,740. So when we minus these three, we got 960,060. And for the prepaid utilities, we have RM200 here. And when we minus these two, we'll get 12,210. So for the total current assets, we got 619,610 here. And for the current liabilities, we have creditors, which is 135,000. Accurate insurance, which is 1,000 prepaid rent after calculation. When we got 540, then we have total up these three, we got 136,540. Then we have the working capital here, which is 483,070. After we minus this value given up here, we'll get the number. And now for the owner equity, we have capital, which is 159,600. Then for the net profit, we got 147,970. So in total, we get 377,570. And for the drawings, including the drawing we got in the additional information, after we plus these two values, we have to get 4,500. Then after we minus these two up values, we got 330,3070 as the value. And for the non-current liabilities, we have loan here, which is 180,000. So when we add up all these values, we will get we got this 483,070 in total.
So this is the end of my presentation. Hope you guys understand my presentation, and thank you.